My dear bcom second year students, in advanced accounts valuation of shares, here is one interesting problem from a repeated textbook or study material. There are 4,000 A equity shares of 100 is fully paid, 6,000 B equity shares of 80 fully paid, and 2,000 C equity shares of 60 paid. The company profit before tax is 3 lakhs and tax rate is 50%, normal rate of return is 10%. So we have to calculate the value of equity shares based on dividend yield method. Yield value of equity share is equal to rate of normal dividend, rate of equity dividend by normal rate into paid up value of equity share. Once again I repeat, rate of equity dividend by normal rate into paid up value of equity share. So normal rate is given as 10%. Then what we have to calculate is rate of equity dividend we have to calculate. For this purpose, you do some working notes. What is the total paid up value of the equity share capital? There are A group 4,000 shares of 100 is fully paid 4 lakhs. B group 6,000 shares of 80 rupees paid up capital 4 lakh 80. C 2,000 shares of 60 1 lakh 20. Total together 10 lakhs. Yeah. In the reader there is a mistake. It's showing as 1 lakh but it is 10 lakhs. Okay. Then my dear students, what you have to do is just you have to calculate what is the profit available to equity shareholders. Profit before tax is 3 lakhs less 50% tax. We got profit after tax less transfer to reserve, it's not given. Then less preferential dividend, preference capital is not there. The profit available to equity shares is 1,50,000. Rate of equity dividend is equal to, quickly my dear students, profit available to equity shareholders by total equity capital into 100. 1,50,000 by 10 lakhs into 100, it is 15%. What is 10 lakhs? That is paid up capital. Okay. Then earning value of equity share is equal to rate of dividend by normal rate into equity share paid up value. If you see A group, 15 by 10 into 100, 150. Similarly B, similarly C. This is a very important problem. This time we are expecting this question. Yeah. Profit belongs to equity shareholders by total equity capital into 100. If you do this, you will get equity dividend rate. Then earning value of equity share is equal to rate of dividend by normal rate into paid up value of equity share. Rate of equity dividend by normal rate into equity paid up value of each share. Paid up value of each share means 100 fully paid, 80 paid, 60 paid likewise. 80 paid, 60 paid likewise. Once again see the question. Copy the question. Unit number 5, valuation of shares. Hope you copied. Yeah. 4,000 A equity shares of 100 is fully paid. 6,000 B equity shares of 80 fully paid. 2,000 C equity shares of 100 is 60 paid. Company profit before tax 3 lakhs. Tax rate 50%. In my first working notes, I calculated what is total equity paid up capital. Paid up capital. Then in my second working notes, I calculated what is profit available to equity shareholders. This is the order actually. From net profit you have to pay tax, then some profit will be transferred to reserve if any. This is not given in this question, but if it is given we have to do. Then any preference capital is there, we have to pay preferential dividend. Yeah. This is a question in advanced accounts. Please subscribe to my channel, my dear students. Yeah. Actually, this is an important question. Do subscribe to my channel for more and more classes on all the subjects.